COVID, our changing economy, and monetary policy. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. I thought we'd go through a live stream I did last night, looking at our Reserve Bank Governor's speech about COVID, our changing economy, and monetary policy. Now I have had to re-upload this live stream because for a portion of it, and this is quite funny, the hold waiting music on the stream got picked up by the bots. So it was a copyright infringement, the waiting music. So I'll turn over to that previous Florian and you can enjoy it. Take care.
2020 has been a year like no other, and it's one that we'll never forget. We've had a global pandemic, the closure of our borders, the biggest economic downturn in nearly a century, very, very large budget deficits, interest rates down to zero, and quantitative easing by the Reserve Bank of Australia. That's quite a list, isn't it? And no items on this list were expected at the beginning of the year. Unfortunately, it guarantees that 2020 will be a year that's talked about for decades to come. Yet through these difficult times, the underlying strengths of the Australian economy and the Australian people have been on display. Our economy has performed better than most other countries in very challenging circumstances. We've had more success in containing the virus than most other countries. Australia's public institutions have worked effectively and constructively together. Our public sector balance sheets are strong and they've been used to very good effect to cushion the shock. And our financial institutions have also helped people and businesses manage their mortgages and their debts. And Australians across the country have reacted sensibly and they've worked together to contain the virus.
Oh, that's good rum.
So even though we have had our challenges and our setbacks, we do have a lot to be thankful for in this country, and I think it's important we remember that.
Hey, Crunchy.
Notwithstanding this, a year like the one we're living through will inevitably leave some marks on our economy and on our approach to economic policy, including monetary policy. And tonight I'd like to talk about some of these marks. In terms of the economy, I'm going to touch on 5 issues where the pandemic is leaving its clear effects. The first, it has brought to an end Australia's nearly 3-decade-long run without a recession. It was an impressive record, and it's one that will not be easily broken by us or by others. We are, though, now having to adjust to a new reality. You can see this from my first chart. The level of output in Australia has fallen by a record 7% in the June quarter, and over 2020 we're expecting GDP to decline by around 4%. In the RBA's central scenario, we're expecting growth of 5% next year and 4% in 2020. These are certainly fast growth rates, but because the size of the fall in the first half of the year has been so large, it will take until the end of 2021, the end of next year, for us to reach the level of output that we attained at the end of last year. The downturn has taken a heavy toll on our labour market, and you can see this in my next chart. Hours worked in Australia fell by 10% between March and May, and the unemployment rate now stands at 6.9%, and underemployment's even higher. We're expecting the unemployment rate to rise further over the next few months to a little below 8% later in the year.
Yeah, that seems insane growth rates, doesn't it?
Central scenario, we expect the unemployment rate to then start gradually declining, but the unemployment rate still expected to be above 6% at the end of 2022. One consequence of this higher unemployment is that wages and prices pressures are likely to remain subdued for quite some time. In each of the next 2 years, we're expecting annual wage growth of less than 2%. It's a very low number. And inflation in underlying terms is expected to be just 1% next year.
Should we be worried about their previous inflation predictions, guys? Just saying.
and 1.5% in 2022. Again, very low numbers. It's certainly possible that the economy will do better than this baseline scenario. The recent data have on balance been better than expected, and the easing of restrictions has lifted spirits right across the country. And further good news on a vaccine or on rapid testing would also obviously be helpful. There is a lot of stimulus in the system at the moment. Balance sheets are generally in good shape, and governments are providing substantial incentives for firms to invest and employ people. So if we do get further good news on the health front, we could have quite a rapid rebound. At the same time,
then it'll overheat, and then they'll they'll up interest rates. What do you reckon? I haven't heard that about the UK. Crunchy, mate, send it to me.
Still possible that we experience further outbreaks, and I think the news in South Australia today is a reminder of that. And it's also possible that the hoped-for medical advances may be delayed, and they could face production and distribution challenges, slowing their rollout. So this means that there continue to be significant downside scenarios as well. So there is still a lot of uncertainty about the future. It does, though, seem highly probable that one of the marks of the pandemic, or one of the marks the pandemic will leave in our economy, is an extended period of higher unemployment than we became used to over the past decade or so. Addressing this higher rate of unemployment is an important national priority. A second area where the pandemic has left a mark is the sharp decline in population.
Look at this, guys. Look at our population growth.
Which you can see here. Over the past 2 decades, Australia's population grew at an average rate of around 1.5% per year. But in 2021, population growth is expected to be just 0.2 of 1%. This will be the slowest rate of increase since 1916, when many Australians left our shores to fight in World War I.
Come on, baby bonus. Come on, let's implement the, what is it, Polish tax-free when you have 5 kids, never pay tax again? Yeah, I think that's a completely reasonable policy right there that we need to implement, definitely. Tax-free for everyone with 5 children. Fantastic.
The fast population growth of recent decades has been a major factor shaping our economy. It's underpinned our relatively fast growth in GDP compared to other countries. It's slowed the ageing of the population, given that many of the new arrivals have been fairly young, and the large number of students coming to Australia has boosted our education sector. And the effects of fast population growth have also been felt in our housing market and in pressure on some of our infrastructure.
You hear that, everyone? In our housing market and our infrastructure, what have we all been talking about here?
So the effects of the fast population growth have been widespread. Looking to the future, I think it remains hard to predict when the borders will open up again, and when they do, what the rate of new arrivals will be. If population growth is to be noticeably slower in a post-COVID world, the trajectory of our economy will look quite different too.
That means we've become so dependent on this immigration population growth. I mean, how can they pull people in?
A third area where the pandemic is having a marked effect is on our property market. It's a pretty complex picture at the moment, with the market simultaneously adjusting to a recession, to lower population growth, record low interest rates, substantial government incentives to support residential construction.
They don't want housing to pop, guys.
That we work, live and shop. So there are a lot of moving pieces in the property market at the moment, and the effects are very uneven across the economy, and they're very uneven across different types of property. The effects of the pandemic are most obvious in the market for retail properties, especially in our CBDs. Vacancy rates there have increased very sharply, as you can see. Not surprisingly, rents and capital values of CBD retail properties have also fallen substantially. There's also been an impact in the CBD office market as people work from home. The national office vacancy rate has increased sharply this year and further increases are expected. But even here, there's considerable variation across our cities, with the biggest increases in CBD office vacancies in Sydney and Melbourne. In contrast to the office market, the markets for industrial property have been stronger, with increased demand for warehousing and distribution facilities arising as people increasingly shop online. The residential market's also a pretty mixed picture. Our biggest cities have been more affected than others by the slowdown in population growth.
Look at those apartments, guys. Look at that.
Prices in Sydney and Melbourne have fallen in recent months, while they've risen in most other cities. It's also noteworthy that in some states, the markets in our regional towns and cities have been stronger than the markets in our capital cities. For example, I think as you can see in this chart, prices have fallen in Sydney recently, but they've increased in regional New South Wales. There's a broadly similar pattern in Victoria. Many regional centres have been less affected by the virus, and some are...
If Biden gets in, do we bring in the manga gang? They have money.
Capital cities, the markets for houses and apartments are also performing quite differently. In most cities, and again especially in Sydney and Melbourne, rents for apartments are now falling, while rents for houses are generally rising. The apartment markets are more affected by the lower population growth and by fewer foreign students coming to Australia, and by young Australians staying at home or with their parents. There's also been an increase in demand for houses as people work from home. So as I said, it's a complex picture, and the full effects of the pandemic will take time to be evident in our property markets. To date, though, the demand from investors in residential property has been quite subdued, but it's certainly possible that low interest rates will change this. So this is one of the many areas that we'll be watching carefully over the months ahead.
Can you see investors jumping onto apartments anytime soon, guys?
Likely to leave a mark is on our attitude to risk. While it's not possible to be definitive here, I expect that for a time people will be more cautious in their borrowing and spending decisions. As we all know, 2020 has been a very sobering year. Given this, it's probable that some people will want bigger buffers in the future to guard against future shocks. I think many people will also be less inclined to lever up, and they'll be more cautious on taking on debts. At the same time, though, it is important that we guard against becoming too risk averse. Over the past decade or so, there have been signs that our economy has become less dynamic. An increase in risk aversion would reinforce this unhelpful trend. As we all know, businesses need to take risks to innovate and to grow. I understand that in an uncertain world, it can be hard to take on risk, and there can be a natural tendency to avoid new risks and expansion.
Bring those back in my toolkit.
But if businesses are to seize the opportunity...
I had that toolkit before I had her. She better not lose the pieces.
...productive capital base, some degree of risk-taking is necessary. So we do need to guard against becoming too risk-averse. Another area that we're watching carefully is how people adjust their portfolios as they search for yield in a low interest rate world. Some people will no doubt move out along the risk spectrum. And as they do that, the additional investment risk will need to be understood and managed. It's important we do that well. A fifth area where the pandemic is leaving a mark is in the digitalisation of our economy. In some areas, progress that otherwise would have taken years has been made in a matter of months. The combination of necessity, of new technologies and the easing of some regulations has made a real difference here. Digitalisation is not only helping Australians deal with the pandemic right now, but it will also boost productivity and it can help drive future economic growth. Examples of this include the uptake of telehealth and the availability of electronic prescriptions. Companies can now hold AGMs virtually, and they can sign legal documents electronically.
Some of those things are just, it's stupid that they haven't been able to do that before now.
Many people are also benefiting from not having to travel to as much for work and for meetings. For some, the time that would have otherwise been spent sitting in a car or on public transport or on a plane can be used for more productive or for more rewarding activities. As you can see from this next chart, there's also been very rapid growth in online retailing, with many people shopping online for the first time. Reflecting this, online retail sales have increased by 80%. It's a large number, 80% since the start of the year. The shift to doing things differently is also evident in the payments data, where there's been a marked increase in the use of electronic payments. One side effect of this is that the use of banknotes for transactions has declined very considerably. As you can see here, the value of cash withdrawals has fallen by 17% this year, and again, I expect this trend to continue. This acceleration in the shift to a more digital economy is prompting firms to innovate and to find new ways of doing things. Firms are having to compete to come up with new products and new ways of delivering them. This innovation and this competition will have a positive long-run payoff for our economy. It will take time to realise the full benefits of this innovation and this competition. But as businesses are re-engineered to become more digital, we will see the benefits in terms of higher productivity and in time higher economic growth. On that positive note, I'd now like to turn to economic policy, where there have been major changes too. On the fiscal front, fiscal policy has taken on a greater role in macroeconomic stabilisation than was the case prior to the pandemic. It's entirely appropriate it's done this, and it reflects the size and nature of the shock we've been living through and the limits on monetary policy in a low interest rate world. This change has been accompanied by a shift in the government's broader fiscal strategy. The first stage of the revised strategy is to support the economy and jobs and promote economic growth until a recovery is assured. And this focus will remain in place until the unemployment rate is comfortably below 6%. In a way, this is a form of forward guidance that is familiar to central banks. In the longer run, the strategy will focus on stabilising and then reducing debt as a share of GDP. In doing this is important. It will provide greater flexibility to respond to future shocks, wherever they come from. The key here is to ensure a strong economy. So I think it's important, and I know this is CETA's focus as well, to focus on the reforms and the innovations that will deliver a strong economy. I think that in time will help us deal with the increased debt we've taken on to deal with the pandemic. There have also been changes on the monetary policy front, and I want to highlight 4 of them.
That's the point, Led. They think it is.
The first is the nature of the RBA's own forward guidance. In the past, our forward guidance about interest rates was forward-looking. We focused on the outlook or the forecast for inflation.
He's meant to be, oh, that's him.
Approach when the inflation dynamics were stable, they were well understood and predictable. But the combination of globalisation and technology and now the pandemic have changed these dynamics. Labour markets are clearly working differently to the way they used to work, and the wage and inflation dynamics have changed. This has made relying on forecasts much more difficult. Given this, we have now moved to place much more weight on actual outcomes rather than forecast outcomes in our decision making and in our forward guidance.
Just think about that for a sentence for a second. Actual outcomes.
Recent board meeting, we said, and here I quote, "The board will not increase the cash rate until actual inflation is sustainably within the 2 to 3% target range. For this to occur, wages growth will have to be materially higher than it currently is. This will require significant gains in employment and a return to a tight labour market. So this type of forward guidance is in contrast to our early approach, which emphasised our expectation of future inflation or the forecast for inflation. We're much more focused today on actual outcomes. The second and related change that I want to talk about has been a shift in the relative weight given to jobs and inflation in our communication. The mandate of the Reserve Bank of Australia was established by Parliament back in 1959, and the central elements of that mandate have remained unchanged since then. Our mandate is to promote price stability, full employment, and the economic welfare of the Australian people. This mandate is broader than that given to most other central banks in the world, with Australia not having swung with the fashion over recent decades to give the central bank a mandate solely focused on inflation. My view is that this broader mandate has served the country well, and it's especially relevant in times like the ones we're living through now.
We've got a housing bubble. So many people can't afford to even get a home. We've got a K-shaped economy with class divide growing. And Pershing asked, how do we fight back against this? We need to shift the Overton window. I think we need to shift it.
In particular, the challenge facing Australia over the next few years is much more likely to be the creation of jobs rather than controlling inflation pressures.
He's right, though. It is going to be a nightmare to create jobs in Australia in the next few years. Who's going to want to take the risk? Employing people, borrowing money to do it. It's going to be really tough.
So that's our focus too. The board wants to do what it can with the tools that it has to support the national effort to reduce unemployment. This does not mean that we're backing away from the inflation target. As Australia's central bank,
he's not actually proposing any remedies. Well, he can't really. He's meant to be apolitical, and all they have is adjusting the cash rate and, intervention in bond purchases, pretty much.
We will continue to provide a strong nominal anchor through the 2 to 3% medium-term flexible inflation target. And we remain committed to achieving that target. But the best way...
So that they want to hit that inflation target.
To do this is through reducing...
Tax Florian more to pay for bigger government. No, wait, I've got the 5 kids. I'm getting the Polish... never taxed for the rest of my life payment, aren't I?
The spare capacity that currently exists in our economy, and this starts with getting people back into jobs.
One thing, B Tiger, if you want to get really depressed, have a look at the average wages and look at the difference between the private sector and the public sector, mate. That'll make you depressed.
If we can help do that, we'll get closer to full employment and get closer to the inflation target, and we will enhance the economic welfare of the Australian people.
You realise when he says full employment, he doesn't mean full employment, everyone employed. It means a unemployment rate that's accepted, as natural based on the interventions in the market. I think it's 4% or something they're saying around there, between 4 and 5, maybe down to 3.
The third change to monetary policy...
Cameron's got it. He was saying the same thing 3 to 4 rate cuts ago. Mate, I'm sure it'll be fine, these other rate cuts. Have faith. Have faith. Greta will get angry at you. Have faith.
That I want to talk about is the strengthening of the gravitational pull of low global interest rates. A decade ago, world real interest rates fell sharply in the aftermath of the global financial crisis. Around the world, after the financial crisis, people wanted to save more and they wanted to invest less. The inevitable result of more savings and less investment is a fall in the return to savers. Given that Australia is part of the interconnected global financial system, we felt the effects of this here too. Even so, our interest rates did not fall after the global financial crisis as much as they did elsewhere, due to the combination of the resources boom, our relatively strong economy, and higher levels of investment in Australia.
Oh, I know public servants work, mate. It's just that they're getting paid much higher than the average. You know, with infinite job security.
Yeah. They fell, but they didn't fall as far. This year, the pandemic has brought another major shock, particularly to investment intentions, which have fallen further. As a result, global interest rates and the return to savers have also fallen further. The gravitational pull of this on our own interest...
Crunchy, they don't want to reduce inflation. They want to have it within a certain band because they want to keep encouraging you to spend money, because we're dumb plebs that need to be manipulated. And, well, technically we are. But you embrace it and enjoy rum.
Interest rates has been very strong. The RBA has responded to this with the policy rate in Australia now effectively at zero, as it is in many other countries. If we had sought to ignore this gravitational pull, there would have been obvious consequences for our exchange rate and for our economy. If our interest rates were higher than in the major countries, there would be stronger inflows into Australian dollar assets, and this would have put upward pressure on the value of the Australian dollar. And in turn, this would have made it harder to make the needed progress on jobs. Over the medium term, I do expect to see a time when Australia's strong economic conditions again justify higher interest rates. But today, during a global pandemic, when a lot of people have lost their jobs and many businesses are struggling, is not the time for that. It will have to wait. The fourth and final change on the monetary front is the return to a world in which quantities, not just prices, matter. Over recent decades, monetary policy has been about the price of money, the short-term interest rate. Relatively little attention was paid to the quantity of money. This too has now changed, with the RBA now undertaking quantitative easing, or QE, as many other central banks have done. I think we all know that quantities and prices are connected, so QE works partly through affecting the price of money, including long-term risk-free interest rates.
Pershing's asking if they'll put interest rates negative. Well, a year ago they were saying they'd never enter QE, mate. Remember that? We were talking about that. I don't know.
But there are other effects too. When the central bank increases the quantity of money and buys assets, liquidity in the financial system is increased, and investors in the private sector need to purchase other assets with the proceeds of the funds that they've obtained by selling their bonds to the central bank. These portfolio adjustments affect the price of other assets, and they affect international capital flows, and they affect the exchange rate. We're still learning about how strong and durable these transmission mechanisms are from QE, and we will learn more over the coming months as we implement our own $100 billion QE program.
Wouldn't they look at Japan? You know, what they've been doing for decades and how fantastic that's worked, rather than do similar things here? Yeah, just saying. Yes, that's the architecture. You know, we're meant to look at precedent and learn from it. But
so there's been a lot of change in our economy and a lot of change in monetary policy since I last spoke to the CEDA annual dinner. Let's hope the next 2 years are not as volatile. But to conclude, 2020 has been a year of great change and a year of great disruption for us all. I'm sure everyone in this room is talking about issues that we didn't even contemplate at the start of the year. Australia is managing very well in these challenging circumstances, and I expect it to continue to do so. The pandemic has been difficult for many people and businesses, but we are now on the road to the recovery. As we travel along that road, we will see some changes in our economy, and we'll see new opportunities as well, and we need to take some risks to seize those opportunities. As we make that journey, economic policy will continue to adjust to our changing circumstances. Thank you very much for listening, and thank you very much for being in the room tonight. I look forward to answering your questions. Thank you.
Rolf, you're asking to let the system clear out the dead wood. Mate, we'd have nothing left. What would we have left?
Do you want to sit here?
Heise, surely people realised this was coming long before COVID. Mate, do you think the average punter realises that? Come on. Remember, 71% of Victorians love Daniel Andrews. They only clap because he stopped talking.
The questions are flooding in, but can I start with a quick one first before I seek to decipher these? 2 years ago when you gave your CEDA address, it was all about trust, and you talked about the importance of our community having high levels of trust in public institutions and in business, and that was key to economic development. And there was a lot of...
Do you guys have trust? Let me know. This dinner is at the Committee for Economic Development of Australia. It is a bipartisan, non-profit, national, independent, member-based organisation providing thought leadership and policy perspectives on the economy and social issues affecting Australia. Headquartered in Melbourne, founded in 1960. No trust here, no trust here. Conspiracy fool. Questions probably modified. Full trust. Dave is fully trusted. Yep. So Dave's obviously hitting the rum too tonight. You know. So 17 million Australians are working more than an hour. Trust must be verified, it must be earned.
Very polite concern expressed on your part about the level of trust at that time. And yet today we have a somewhat different story emerging. There's this language of Team Australia and public institutions having risen to the challenge and government having done the right thing. And in a lot of your recent speeches you've been talking about cooperation and...
Is that the mainstream, guys? Team Australia, government having done the right thing, all these interventions. Is that the majority? Is that what you're hearing out there, guys? Yep. Trust the World Economic Forum. Yay, happy feelings. Yep. Well, you know, in the World Economic Forums, then you get to live in your pod and eat your bug meat, won't you? And then grain. You'll die of heart disease. Ben's going out to buy some made in crap China stuff. See if you can find one thing Australian.
We fix the trust issue, and are we done on that? And it seems to be a very optimistic way to describe the pandemic experience.
Well, no, I don't think we're done on that, but adversity does bring out the best in people, doesn't it? Mm-hmm. I think we've...
Adversity brings out the best in people, coming from the man whose mission statement is to avoid our nation having a recession and allowing us to develop from that. Oh...
Seen the political class, do a pretty good job. Our public institutions have performed well, and the banks have come to the party. They've given these loan deferrals. They're helping people in difficult circumstances. So adversity does bring out the best in people, and we've seen that in Australia. People come together.
We're snowflaking our nation. You're gonna have people that no bloody idea of adversity now. They're spoiling us. The banks are spoiling people. You know? We may go back on the rum economy. Oh shit, you're right. I better not drink it. Be like a ration here. How do I, how do I get a Bundy rum sponsorship? Oh, I guess you can't get them. It's alcohol, can you?
Together in a way that we'd hoped would happen, but weren't sure whether it would. But it actually has, we've come together, and as you say, Team Australia has done a very good job, and the country's benefiting from that.
Josh is a fan of Bitcoin. Problem is, mate, normal people can't use it. It's too complicated. I can barely get my mother to use her phone to watch YouTube and things like that. I hope she's not watching. She might get angry. Normal people can't use it. Seriously. At least, well, now PayPal, it's taking baby steps, but they're just prepping for the central bank digital currencies. That's what they're prepping for. Oh boy.
I think Australians have come together as well. We've accepted the restrictions on our liberty better than I thought we might have. I remember back in February when we saw the lockdowns in some countries, including China, people saying that couldn't work in our democracy.
Yeah. Couldn't work in our democracy, eh?
But Australians, with the leadership that we've had from the political class, have accepted this, and we've come together and done the right thing. None of that removes the underlying importance of trust. As I talked about 2 years ago, trust is kind of the binding agent for a kind of an open economic system. So businesses and banks and government, the central bank needs to keep earning trust, and I think we're more appreciative of that than we were 2 years ago. And because I'm optimistic by nature, I'm hopeful that the experience we're all living through will show the community that the institutions, government actually can be trusted to do the right thing by the people, and we've got to keep earning that. So, I look for the upside in everything, and one of the upsides here is that we can, we've shown the community that we can do the right thing. And
I did a video on that, Ryan. Software update, mate. They buggered it up. Buggered it up with the ASX being down today. Nothing exciting, just incompetence, the Australian way.
Look after the collective interest. I think we can build on that.
So when you say we can build on that, part of what you talked about tonight was the period of uncertainty immediately ahead, and uncertainty is always problematic.
Do you honestly think, guys, that, in the States, we look at the election there, even though they don't have preferences, you've got a large group of people voting for either the Republicans or even the Libertarians. Do you think there is even a desire for, or an effort on individual liberty here in Australia, guys? It's not the same as other cultures, I think people will happily dob in their neighbours, prattle on them, get the council to rock up, or ring up the police because someone's having a party during lockdown. I think we're a nation of Karens in many ways. Look at 71% Victoria, guys. 71%. I don't think many of the 71% are viewing this channel, and that's why we're getting the response we are in the comments, but...
So how can we build on that optimism that you've just described to mitigate some of the potential downside of fearing the future?
Yeah. You're right. There's a lot of uncertainty about the future. We can focus on that. We can also focus on the resilience of the system and the opportunities that we now have. It's been remarkable that in a matter of 6 months we've got 2 or 3 vaccines that are in advanced stages of development. People thought this could take years. But when our scientists put their mind...
When they're talking years, they're thinking deployed, not advanced stages of development, but okay.
...things, they can actually come up with solutions. So I'm encouraged by that. And
Does his constant positivity remind you of the... I've been watching, CoffeeZilla, this guy who debunks all these con artists. Does it remind you of the positivity of the con artists? I'm sure you've seen the ads. How I made $1 million, or the ones that are telling you, this isn't just a dodgy Amazon selling course, and it is an Amazon selling course. It's all about the positivity and what that secret book and all of that stuff. It reminds me of that. Maybe it's the rum talking.
it's uncertain about what happens next year, but it's quite plausible that a vaccine becomes widely available and we can start to get back to normal sometime over the next couple of years. So we've got to be realistic, but on the other hand, there's a fair chance that the scientists actually can pull this off. The other thing I think is a point of optimism is the digitalisation of our economy. I know many organisations, including my own, have been trying to do things differently for a long time, but we were struggling, and then years of progress was made in a short period of time. And I see renewed energy by business to do things differently, and hopefully that process leads to more innovation, and I think more competition.
The problem with that is the increased digitisation of the economy means we are going to have more competition on a global level. And are we up to competing on a global level?
And that's why I made remarks about kind of not being overly risk averse, because I see tremendous opportunity out there. We've got to seize it, and we can't kind of become too kind of pessimistic about looking at the past 6 months, and it's been very difficult, but there's a better path forward here.
I'm aware of that. The proposed RNA altering vaccines. I've seen some doctors talk about it, mate. Bloody terrifying. Bloody terrifying. Yeah. I'm sure it'll all be fine.
And we've got to seize it.
Well, I for one share your optimism, and I'm sure everyone in the room, with the exception of this gentleman who sent in a question, also shares your optimism. But Ken Morrison has asked, where can Australia's economic growth possibly come from through 2021 and beyond without the contribution of population growth?
I'm assuming this is Ken Morrison, the Chief Executive of the Property Council of Australia. Will I take the vaccine? Well, probably half a decade. If it's been proven to be safe and effective in the long term, sure, why not? I'd take a whole lot of other ones, but I don't want to be the first idiot to jump at it. I'm so young and healthy. You don't look like this without work, lads. My arrogance will get me through.
Well, lower population growth does mean slower nominal and real GDP growth. Our population, as I said, has been growing at 1.5% a year, so that's fed right through directly into faster nominal GDP, real GDP growth than we otherwise would have had. So if we're going to have slower population growth, then we are going to have lower growth in GDP.
What if it's mandatory? Persian King is asking. I don't think that'll happen in Australia. I think if it is, then we'll be able to find people that will be willing to address people's issues. Just saying between the lines, mate. I'm sure there'll be ways to deal with that. Honestly, what they'll do is, I bet they'll implement it, roll it out, and then they'll just make it voluntary, and then it'll fizzle away. Because what's the mortality? 1%. Most people probably getting it, not even realising.
It doesn't mean we're going to have lower growth in per capita GDP necessarily, but we
have been having lower growth per capita GDP, well, trending down since the GFC. I saw that myself. Anyway.
We'll have lower nominal and real GDP growth. So where does growth come from? There's a lot of stimulus in the system at the moment. Interest rates are as low as they've ever been. They're going to stay low. The government has injected a lot of liquidity and cash into the system. It's creating substantial incentives for businesses to invest in and hire people. There are very significant stimulus measures in the housing residential construction market at the moment. So there's a lot of stimulus in the system.
Growth comes from stimulus. Yeah, I mean, this is the problem. They think printing money generates growth.
People's balance sheets are in pretty good shape as well. The saving rate in the national accounts in the June quarter was 20%. We've never seen anything like that before. So the government gave people a lot of money. We couldn't spend it because there were restrictions, but we're also more cautious, so we saved a lot. So my hope is that if we get reasonable news on the health front, that people have the confidence to spend that money that they've saved up. Their balance sheets are in a better position, and with all the stimulus in the system, that will be enough to get the economy growing again and bouncing back.
A lot of people have got good balance sheets, Rolf, at the moment. They've saved up a lot of money. And, you know, I'm moving money around to ING to get interest that is above CPI, and it's a pain. You know, having money is essentially worthless. In the bank, it's going backwards.
But it was my final point here. It does depend upon the health situation. We're seeing now in Europe the devastating effects of second or maybe some kind.
Jasmine's asking, is the background? Yes, people are having dinner. This is the Committee for Economic Development of Australia, so probably a posh little dinner. You know, usually get 2 or 3 serves, a bit of networking. It's always good fun. You know.
Countries' third waves. In Europe, they grew in the September quarter.
How can people save money when they're taking the money off people? They're not. They're giving money out to people. Why do you think so many people support Andrews in Victoria? Because, you know, they haven't felt the recession. They're all on JobKeeper. They're sitting on their ass at home, or they're on JobSeeker with a bonus. That's why.
December quarter, they're going to contract again because they didn't keep the virus under control. So if we can keep the virus under control with the stimulus in the system and the good balance sheets, I think we can come back strongly.
Thank you. Okay, I have a few more questions here, please.
How can we come back strongly if we're so dependent on international migration and international students to push up the property price sector? More lobster. Hopefully be steak. Hopefully be steak.
Philip, first one. There's a question here about, I think this is referring to the 3 November announcement, the historic rate cut and the quantitative easing intervention. Reference here to that intervention being without precedent. Some worry the economic shock when it unwinds will be equally unprecedented.
Crunchy's saying, I mean, when our interest rates go negative. I don't know if they will. I don't know if they will. You know, we'll have to see. I mean, right now your money is you're losing value. You're sitting it in the bank with inflation at 0.7%. What are you getting? I looked today, Combank 0.55 with some super duper bloody savings account. If I jump through 50 hoops and I don't know, you know, give my firstborn to the bank every month. So yeah, your money's losing value already. You know, people will just save more. That's what the governor said. So they'll probably just save more. It'll be less for the economy. I hope they don't go negative because damn, that's just. So don't worry, they can cut rates by 0.005%, a 50% rate cut. Come on.
What do you say to these concerns? I'm not quite sure what that question is saying. I can guess, or perhaps you'd like to guess.
No, I don't really want to guess. Is right? It was an unprecedented. We've had 2 kind of major policy packages this year. Both have been unprecedented. But I'm not sure what. There's a question here. They can ask, kind of elaborate what their concerns are. I don't want to manufacture concerns.
No, well that's consistent with your optimistic paradigm.
Optimistic paradigm.
Is it saying that if all those other things take place that you've referred to, an imminent medical solution and a conflation of other positive factors, will the measures taken on 3 November have unintended consequences?
Oh, Pershing's asking me silver and gold. Mate, diversify. I need cash. I'm about to do a huge construction project. And favourite weapon outside of guns. I don't know. Look behind me. Look what I'm trying to learn. You know? But, you know, I think I've got a few video viewers here in a gun club in the Sunny Coast. I should join one. You know, it'd be a good series. Once I get the house done and I can put a safe in. You know? Rachel says if I learn how to hunt, she will butcher it. So, she's made the promise.
which you might not be happy about. I mean, isn't that code?
Heise, are you building a German bunker? No, I'm not building a German bunker. Although we are using aerated concrete in the floor slabs. You know, because it's cheaper than real concrete. Or not cheaper, but got to be easier, less footing required.
For saying what will it do to inflation?
Yeah, well, I think there are two possibilities of kind of in the world of manufacturing potential problems. One is inflation picking up too quickly and us being surprised at it. It's possible, but I think it's incredibly unlikely. For inflation to become a problem, I think wage growth has to be kind of 3.5, 4. You know, in what state of the world does anyone think wage growth is going to be 4% in the next couple of years in Australia? I'm hoping it can start with a 2. Our forecast is it starts with a 1. So things would have to change very, very dramatically for wages growth to be rising at 3.5 or 4 and be causing an inflation problem. It doesn't have a 0 probability, but it's very, very small.
Yeah, he's right there. And yeah, Crunchy, we're raising and building under, mate. Raising and building under. You know, that's why we bought this place.
I think the other concern that sometimes people raise is the possibility that asset prices rise a lot because of the very low interest rates, and particularly housing prices rise a lot. Again, that's possible, but I don't think it's particularly likely because of the population dynamics. The rental vacancy rates for residential property at the moment, particularly apartments in Sydney and Melbourne, is rising very, very quickly. And rents are falling. They're the weakest they've been in decades. So rents are falling, very high vacancy rates, lower population growth. So I think those underlying forces on demand are going to keep price growth relatively low. I also expect that people will be a bit more cautious about borrowing than they were in the past. You know, so you can't rule out asset prices rising too quickly, but I think again it's a fairly low probability event, and if it does happen and borrowing picks up too quickly, we know from the experience of the last couple of years that macro-prudential instruments, that APRA exercises, can be effective in slowing the build-up of debt.
Did you hear that little tidbit there, guys? You know? Oh, and Jasmine is making a joke about me never mentioning anything about meat. Exactly. Yep. You know, I was a vegan for 24 days on the Daniel fast, so, you know, I get the cred. A Banana Republic, Crunchy asked, yeah. Well, aren't we already? Clear Skies is saying I'm carnivore. Technically, I'm ketovore because I still like my sauerkraut and pickles. So technically ketovore.
While we're talking around inflation, can I ask a question unrelated to COVID and one that should have been posed, you know?
So they juice up the market to get into housing. Or no, first they have a royal commission, then they blame everyone for people just going nuts in housing, then they make all these rules, then they pull the rules away, then they throw money at housing, so everyone jumps in housing, and then the Reserve Bank governor said APRA can step in again and, you know, contain it. Free market, everyone, you know, free market. Oh boy.
Pre-pandemic, having heard you speak so many times and having heard your hope, another optimistic hope that inflation would start creeping up, we all start to wonder why it's such an intractable problem and whether or not there's something wrong with economic orthodoxy such that we just can't seem to get it up where you want it.
I've got a dirty mind.
Basically inflation comes from the balance between supply and demand. Yep. I think we know that, and I'm confident that those basic laws of economics work, and I can see that operating in the economy right now. There's been very strong increases in grocery prices for the past 6 months. Why is that? Very strong demand as people shop, you know, and cook at home. There's been the fastest rate of increase in homeware prices in a long time. Why is that? People are kind of sitting at home doing online shopping and improving their houses. In the rental market, the rents are the weakest in decades. Why is that? The vacancy rate's very high and there's a lot of property and not many people going to it. So the underlying laws of supply and demand still work. having said that, we have had trouble getting inflation back to target for a number of years, and I think this comes down to the way the labour market's operating. The fundamentals in labour markets, I think, have changed in many, many countries. You saw this in the United States as well. They got the unemployment rate down to kind of low fours, and it still wasn't generating inflation pressures. I think we all, and I've spoken about this on other occasions, I think up until the pandemic, and presumably the case now, we all feel like there's more competition out there. And that comes because of globalisation and technology. Jobs that could have been done in this great city can now be done anywhere around the world, and we all know that. So the combination of globalisation and technology has changed the wage dynamics, and so even when we get quite low unemployment rates, we don't get wages picking up, and inflation doesn't pick up.
There we go. I was talking to a colleague, or family member actually, who's also graduated from architecture, 2 degrees, earning $35 an hour, which is not what you want after 6 years of study, to be honest. One of the reasons why, because we've faced this in our business, just competing with firms that offshore everything. That's one of the reasons why we've bought our own scanning equipment that we can rent out, because you can't offshore the physical equipment, can you?
So it really comes back to the operation of the labour market, and this is why, or one of the reasons in our communication, we've been focusing on the importance of getting the unemployment rate down, people back into jobs, and wage growth picking up. So we've got to keep chipping away at that, I think. But the underlying supply, demand...
What about, rather than pushing about wage growth up, what about we let people keep more of the money they actually earn? Rather than stealing so much from people working. And I'm not just talking about income tax. What about all the other taxes and burdens we put on people? There's another way. The government has the power to instantly give everyone a pay rise.
Dynamics still work. We've just got to...
What about we get rid of the tax on this lovely can here? That'd be great. Remember when buying a booze, a drink didn't cost you a bloody fortune?
More demand for labour relative to the supply of labour.
Yeah, well, as long as you're still optimistic about the theory, that's important. Look, I have a question.
It's easy to be optimistic when you're on $1 million a year, isn't it? But that's not necessarily going to make you happier, guys. Don't fall into that trap. Are we heading towards total communism? Oh, maybe. Hey, I've played Papers, Please. Why not? The problem is, we've got to hope that America doesn't head down that path. Where the hell can our kids flee to?
Question from CEDA's chairman, Diane, and it is as follows. The Western Australian housing market seems to be displaying a different dynamic. Are you considering the state of the West?
We certainly are, and we have a team in Perth that talks to businesses in Perth and actually in the regional centres as well. And what we're hearing at the moment is some businesses are having trouble getting workers with the right skills. Yeah. There's an obvious solution to that. Whether it's sensible, it comes with other costs, but there's an obvious solution to that. There are very large...
I'm in the burbs. What am I hunting? I'm not hunting anything. It's a dream, an aspirational goal of mine. I need to talk to some friends.
Incentives for residential construction. The biggest incentives in the country are in Western Australia, and that's affecting the housing market there. So we're in close contact with businesses there, and Western Australia is doing very well at the moment.
Question here, I don't know if you wish to answer this. It's to what extent do you expect the trade tensions between Australia and China to have a big impact on our economy in the coming year?
Oh, good question.
It's a very good question. I don't have a crystal ball on that. I'd observe that the Chinese economy is growing quite strongly at the moment. It's bounced back more quickly than any other economy, and once again that's to Australia's advantage. Commodity prices are higher than they otherwise would be because the Chinese economy is doing quite well. and the fact that commodity prices are high, our exports are doing better, and actually government revenue is going to be better. So once again, we're benefiting from that. There are certainly issues in some particular product lines, and we've all got to hope that they go away.
B-Tiger, this is very normal. This isn't really a meeting, it's a function. You know, they make money, he comes as a guest. Yeah, it's a function. It's making me hungry. I've been to these things, I imagine all the steaks I was eating. It was never worth it really for what you paid. The networking wasn't enough.
What happens there, it's very important it works out well, but I don't have a crystal ball, I'm sorry.
Well, this is a complete change of
Well, I don't know if we'd trust this crystal ball anyway. Hey guys, what do you reckon? I want steak now.
pace. Do you have any concerns about the ability of pension funds and superannuation funds to deliver on annuity products given the record low rates?
Do I have any concerns? It's certainly harder, isn't it?
Sure. But you're not assuming personal responsibility for it.
No, I mean, it's an issue that affects not just the annuity funds, but many Australians who put their money into bank deposits and rely on the interest income are finding it very, very difficult. And I think today I got another 5 letters reminding me of the difficulty that many people are experiencing. So I'm not so concerned about the annuity funds. I'm concerned more about the people who are relying on low interest rates, and they're not getting the income that they used to get. I think it's an issue. And it's something that we discuss a lot, and the Reserve Bank Board talks a lot about the difficult situation that those people are in.
Just let us all borrow directly from the Reserve Bank, and then we can get that money and put it in another bank and get 0.55% interest. That's a spread of, 45 basis points. We're in the money. Pershing, he says so much BS about caring about people. I reckon he's a soft touch. I think he's genuine. I think he's in a rock and a hard place. Honestly.
Question here, if the key driver of business investment is rising demand, and we need to...
Well, that's not fair, Pershing, mate. I'm sure he's read about normal people in a book. He grew up normal. He did.
Then we need to boost exports and consumer confidence.
Clear Skies thinks he's thick. Well, no, he's a Keynesian. This is just their theory. Their approach to economic management. They think this is going to work. This is the theory that they have. It's an opposite. It's an opposite theory to the Austrian approach to economics. It's different schools of thought. We're trying this out for a century. We'll see how it goes.
Is Australia sufficiently competitive, and are policy settings appropriate to ensure our competitiveness?
Well, that's a very broad question, I think. And I think my answer here is we can always do better. We're doing pretty well, but we can always do better, can't we? We can always be more competitive, more innovative, and the policy settings can be dialed up. So beyond that general response, I don't think I've got anything else to offer.
This is a very personal question. Are you ready for this? You've described the year as a year like no other, but was there a particular moment, perhaps early in the crisis, when you had your greatest fear about the pandemic and the devastating economic fallout? What was the moment when you thought this could be much more serious than I feared?
The moment that I remember most clearly is being in Saudi Arabia, of all places, with the Treasurer at a G20 meeting. Mm-hmm. And on the first day of that meeting, the IMF was saying, look, China's got the virus, it's kind of starting to get it under control, it should be okay. And on the second day of the meeting, we heard that the virus was in South Korea, Iran and Italy. And on one day, all those 3 countries had announced lockdown, and I thought, gee, if that was happening in 3 such diverse economies at the same time, this is going to be a global problem, and if it's a problem in South Korea, Iran and Italy, it's going to be a problem everywhere, and we're just not prepared for it. And I remember talking a lot with the Treasurer that evening about the potential implications of this, and I said, this is going to come to Australia and it's going to be a very big deal. And I wondered at the time whether our democracies would be able to lock down in the way we'd seen in China. I think many of us kind of wondered whether our population would accept that. Yet we have, and we've done the right thing. So that was the scariest time I remember in the whole episode.
And then Team Australia got organised.
It was very clear within a couple of weeks that the government, the Reserve Bank, the regulators, the banks, the landlords would all need to be part of the solution. And I think, to Australia's credit, we managed that very well, and we did it very quickly. We all had to change long-standing positions. I mean, it wasn't easy for the government to give up on its commitment to surplus. It wasn't easy for us to cut interest rates down to zero. I don't think it's been easy for the banks to tell people they can have a mortgage deferral for 6 months plus maybe another 4. So none of these things have been easy. But
and the regulators
and the regulators and APRA had to give up on a lot of things.
But all of that is easier than allowing the market to run its course, isn't it? There'd be no political will for that. And Pershing, you asked me for my favourite economics book. I don't really have one, to be honest. Does Adam Smith, but that's so old. That's so old. I'll have to think about that. Does Atlas Shrugged count?
So there's a lot of stuff that had to happen, and it wasn't like months of policy deliberation. We had a few meetings where we decided, well, look, this is serious, we need to act quickly, decisively, and in the national interest, and the political class and the regulators did that, to their credit.
Can I ask you a question about modern monetary theory and why it's attracting so much comment in the US? And I know that you've expressed grave concerns and you responded with comments like there's no such thing as a free lunch. I think someone else has said that at some other point in history as well. Why is it getting the traction it is in the US, and why don't you like it?
Here we go. I got to have some rum. This will be interesting. Oh, I'm running out. Okay, you got your rums ready, guys? I better have another sip. This definitely isn't keto. It's all sugar. Okay.
I don't know why it's attracting so much attention in the US. There are a lot of other political factors at play there, which I won't comment on. It's called modern monetary theory, but there's actually not much monetary and not much modern and not much theory in it. But anyway, it's really a... You did ask me. So it's really a theory about, or a series of propositions about fiscal policy. Right. And the first proposition is the government should just keep spending until it achieves its objectives, whether they be full employment or equality or inflation. So the government should just keep doing what it does till it achieves its objectives. And the second proposition is that it shouldn't worry about financing when it's doing that. Yeah. If you've got a central bank there, you can go to the central bank and ask it to print money to finance, and you can achieve your objectives. So it's really about fiscal policy. I think there are kind of a large list of kind of potential problems with it. The first is that it assumes that government policy can just by kind of being dialed up and down can kind of get the economy and the society exactly where the government wants it. The history of that is not particularly encouraging to think that kind of fiscal and government policy can be used in such a fine-tuned way. It also assumes that the political system can deal with the inflation threat. That the central bank financing can be just turned on and off to achieve the government's objectives. The history there is not that good. The reason why we have independent central banks is because when in the past politicians are being effectively determining the policy of the central bank. It's always led to too much inflation. And once inflation gets in the system, it's very hard to control. I think the third observation I was making is some proponents of modern monetary theory do think it's kind of some free lunch. As I said, it's a free lunch. It kind of, we just go to the central bank. After all, they make the money. If you just give it to the government, they can spend it and everyone's better off. The reality, though, is even if the central bank finances in the short run, someone ultimately has to pay, and they have to pay through higher taxes. They either pay through the inflation tax or taxes because you need to recapitalise the central bank, because you can't have a central bank indefinitely having negative capital, or the spending's paid for by taxes on the banking system.
Just the scary thought. Think about the people who are lined up to replace Philip Lowe. Just think about that.
Through the banks being forced to hold reserves at the central bank at zero interest rate when the market interest rate's higher. So someone always pays. And I think it's attractive to some people because they don't kind of see all the multiple linkages down the track where someone pays. In the instant that you print the money, no one pays. It seems free. The central bank just creates the money, doesn't it? But someone always pays.
That's a very
that's the thing. And they always pay in terms of higher taxes. If the government spends money, it's paid for by higher taxes by someone at some point. There's
see?
situations at the moment where it makes perfect sense.
It's all the juniors, guys. At least I'm assuming that.
To borrow against future income, against future taxes, to smooth the economic shock. We're in a once-in-a-century pandemic, and I think it makes sense the government to use its balance sheet to smooth that out. But as a general proposition, kind of the government just continuing to borrow to achieve its objectives doesn't make sense. It just leads to inflation or taxes.
Well, I think that is clear. That's the death of modern monetary theory. Thank you. Thank you, Governor.
Some people don't just look at the free lunch and think
There's such a few New York bestsellers that have got enthusiastic about it, but it's good that we've got that very clear. This is an interesting one. You are occasionally asked if there's a time when you can see that you will be taking interest rates negative, and your current view is that's not happening and you don't see that happening, at least in the foreseeable future. So this question's a bit pointy. It asks, what would it take for you to get to that position?
Well, we've said repeatedly that it's extraordinarily unlikely, and obviously that's still the position we hold. And the reason we say that is, I think if we have negative interest rates, there are clear costs in terms of the supply of credit. It makes it harder for banks to lend. And we're also seeing evidence in Europe that when interest rates are negative, some people actually decide to save more rather than to spend more. Lower interest rates are supposed to encourage people to spend, but if you're getting negative rates on your deposits, some people say, well, that's terrible, I've got better start saving more because the money I've in the bank is worth less every day. So it affects the supply of credit and maybe has perverse effects on spending. So they're the negatives. The only upside I can see is it would put downward pressure on our currency. If our interest rates were negative and no one else in the world had negative rates, then people would want to hold Australian dollar assets and the currency would come down. So a weaker currency would be the benefit, but the costs outweigh that benefit. So you asked under what circumstances would we rethink this? I think the only case where we'd be rethinking it is if the world's major central banks, all the major central banks, decide to set their interest rates at negative territory. Because imagine, for the sake of argument, the Federal Reserve, it was minus 50 basis points or 1 percentage point, and we sat there with higher interest rates, and we're still in the world we're in now. The current Australian dollar would be incredibly attractive, capital would flow here, the currency would go up, and it'd be harder to create jobs.
There you go. That's the thing to watch. We're just a little cork in the ocean, aren't we? Flowing around.
So that's the only circumstance that we would think about it. I think it's extraordinarily unlikely because most of the major central banks that have...
Oh, what? Job finished, everyone. We'll have to wait. We'll have to wait till it... I paused too much. Oh well. We'll have to see. Did I upset him? I don't think I did. Let's jump back here. Let's see. Nope, just finished. Okay, well, we'll have to look at the rest of the questions later. You know, the questions are over. So, still, it was interesting to see his take on MMT. It's good to see. You know, a bit of reality there. What do you think, everyone? No, it hasn't been pulled, mates, because I was pausing. I was pausing to add commentary to it, and it's a live stream. It's not a pre-recording. So there you go. So we missed out on the dessert. You know, the bankers stopped the stream. Yep, that's it. That's it. You know. Guaranteed negative rates. You saw it here. Saw it here tomorrow. There we go. I might go cook a steak after that. I've been hearing so much clinging on the bloody plates. Now I've made myself hungry. So what do you all think, guys? That was interesting. You know, we'll have to see. We'll have to see. I mean, that the takeaway here. If everyone else is going negative, they've got no choice. They've got no choice. They'll have to flow into negative. You know, or else we're kind of screwed. If the Fed goes negative, we will. That's what Jeremy thinks. You know? He'll probably be kicked out of wherever he came from soon. They haven't got a clue of what to do. Well, they're making up as they go along, aren't they? Pershing loves the streams. Thanks, mate. Thanks for joining. Thanks, everyone, for coming along. I thought I'd just do this one tonight. And if you haven't already, make sure you've subscribed to my HeiseSaysUS channel, everyone. Oh, where is it? You can tell I've been watching some Dave Ramsey today. Well, you can find it here on the community tab. If you go down here, you can see here, HeiseSaysUS. And I should probably... haven't done my video for today. I probably will. I gotta find... if anything US related that you think is interesting, I thought there'd be some stuff to talk about. So we'll have to see. What I'll do is once we get the archive for this, I'll bring it down and we'll look at some of the questions there. Might do that as a live stream again. Let's check the markets while we're here. We'll go to trading economics. So how are we looking at here? You know what? I'll bring that over to here. We'll jump over here and we'll see. What are we looking at? Oh, forget about looking at the ASX, hey? Doesn't matter, it's a holiday today. Gold is sitting at $18.93. Silver is at $24 with change. The Aussie dollar is at nearly 73, 72.9 US cents. Let's look at the cryptos because Bitcoin is just going crazy at the moment. 1,600, it's gone up. Ethereum is at 450. I hate when Ethereum gets expensive. I just hate it because it's so expensive. You know? So, that's Tether gone at 1. XRP is at 27. Okay. There we go. So, there we have it, guys. Thanks for joining me. I'm going to go and make myself a steak. What's this? Oh, thanks, Crunchy. I'll have a look at those. But I'm actually getting really hungry. 2 hours of people cleaning plates. I'm going to go probably cook a knackwurst. Anyway, guys, thanks for watching. Like, share, subscribe to the channel. Check out the US stuff as well. And I'll see you later. Steak, someone has a pile of cash. Yeah, of course. You buy your beef in bulk, mate. Full cow. That's how you get it cheap. You know, only suckers pay retail. See you guys.